Using their extensive experience, knowledge, and success in the world of tax strategies, real estate investing, and other wealth vehicles, Jim and Lorraine use their straightforward, big-hearted style to guide thousands to ignite their unique wealth formula. With decades of success designing and implementing customized wealth solutions, they appreciate that success is truly about education, support, and the art of supercharging your unique style of wealth accumulation.
Welcome to Real Estate Investing for Women. On this show, you will learn how to create wealth through real estate the blissful way. That means with very little stress and very little time. We talk about strategies, mindset, heart set, money smarts, resources, and so much more to ensure you're able to create the success you most deeply desire. Now, here's your host, Monica Sawyer.
Hi there, Jim and Lorraine. Welcome to the show again. How are you?
We're doing great. How are you, Monica?
So, ladies, if you're watching this on YouTube or Roku, or you can see this, you'll notice that I am frozen. We cannot figure out how to get this to not freeze. I've got like a weird, what would you call, Jim keeps calling me a cartoon. So this show is too important to not record. We've had to reschedule a couple times. We're going to record it anyways. But those of you watching in video, please forgive me for my internet not cooperating today. But I'm hoping the sound is still really good. But anyways, now that we got that out of the way, so glad to have you guys here. And go ahead, Lorraine.
Thank you.
No, we're good. And you know what, Monica, you are doing such a great thing for all your entire community. I watched a couple of your shows and they're so informative. They're very educational and they're there to help your community. And that's just really, really good that you're doing that for women. I love it.
Thank you, Lorraine. Yeah, every once in a while, I think, and it doesn't happen often, but every once in a while, I'll be like, I don't feel like recording today. Recording is my favorite thing to do, just so you know. But when I have those moments, I'm like, oh no, I want to see my ladies. And so I get out there and I do it. So it really is fun for me. So thank you for that.
Good.
Yeah.
Good.
So Lorraine, you and Jim are two of my favorite people in the world. Jim, I do like Lorraine better. I just want you to know.
I'm used to people feeling that way.
I know. You kind of feel that way too, I think. So but
when somebody likes the bad dad joke type approach, then I become the favorite.
Yeah, I think my husband prefers you, but I'm a fan of Lorraine. But Lorraine's a friend of mine, right? I feel like we're really close friends. And so I love you guys. And so I recommend you frequently to my ladies.
Thank you.
And one of the things that's come back several times is, did you know they're being sued, or did you know they're being investigated, or whatever it is that they come back? My ladies, through my direction, have been taught you have to do your due diligence. Like, I can only recommend so much, and then you have to do your due diligence. So I have to confess I'm proud of them for coming back to me with that. But and they have helped me to find other people that I might have on my show who do have issues that I didn't know about. So it's a great community thing that we kind of all keep our eyes on the ball for each other, and people keep me informed. The issue here for me is that I know you. I know about your integrity. I personally do business with you. I love you guys personally. And so I know that in this particular case, interesting, bad things happen to really good people. And so I would like you to help us to understand what really happened, so my ladies know the story the same way that I do.
Thank you. I wanted to share the story because it is actual. What happened is the story is that Jim and we were very excited to be speakers, teachers, faculty. That's the word I was looking for. Faculty for a New York bestselling author way back in 2008. Mm-hmm. And we still have that amazing relationship today. And so what happened is we were financial planners at the time, and we personally have been real estate investors. this year will be 29 years that we've been real estate investors. So back then we were real estate investors, we were financial planners, and we came across turnkey real estate. And we went out and visited these turnkey providers, and they said, you know, if you allocate part of the portfolio to real estate, which we love real estate, and I'm sure your community does too, you know, you can also get a referral fee and expand our business model. And we said, yes. Well, we had so many people that the vendors couldn't keep up. And so we expanded to new vendors and providing turnkey real estate. Well, one vendor couldn't scale up, even though he said, I can do it, I can do it, I can do it. He couldn't scale up. And so we just flooded him with clients. And so it took one client, one niece from Germany who visited her aunt, said, what, your property's not rehabbed, it's not finished, we are going to sue the vendor. So they sued the vendor, the developer, real estate developer. And what was really sad is they sued title, they sued escrow, they sued us, they sued everybody. And it was like, wow, we got included in that, and we didn't get paid. And we weren't the developer. And so it came out, because we were securities licensed at the time, it triggered an examination from FINRA. And so that's how this whole bad news came on the internet, because we were securities licensed. And just a side note, when I share with people that we got included in this lawsuit, by the way, it did get closed and the developer had to buy the properties back, and it's all public record, is that because we were securities licensed, it showed up on the internet as sanctioned from FINRA. And Jim, do you want to explain what FINRA is and that whole sanction?
FINRA stands for,
it's the Financial Industry Regulatory
Authority. Thank you.
Yes.
Financial Industry Regulatory Authority. And I'm going to read this quick little paragraph from the document, the final agreement that we came to. From
our attorney and FINRA and us, where we all signed.
James and Lorraine Conaway failed to timely and completely disclose the scope of the real estate related outside business activities. In other words, an outside business activity is that activity which is not directly regulated by FINRA or any securities, real estate. To their FINRA registered firm, they also provided their firm with inaccurate information about the outside business activities in response to an investigation of them. As a result, they violated FINRA rules 3270 and 2010. Now, if that doesn't sound a little like innocuous, I don't know what does. Basically, what they're saying is that not that we didn't disclose things, but we didn't disclose them adequately enough. And the issue boils down to, further in the letter, the Conaways, at the Conaways' direction, Tycon, the company that we used to be associated with, attempted on an ongoing basis to track the progress of rehab on the client's properties, coordinate with GK to confirm the scheduled rehab work was being done as agreed, and monitor the client's rental properties that were not performing or underperforming, and direct GK to address client grievances. As you can tell, we were accused of having done a good thing.
Of helping to try to get the rehab completed.
And the sanctions that when you Google our name, that there's lots of attorneys who would love to be able to sue us for all kinds of strange things. And so they exaggerate these things or word them in very, shall we say, aggressive fashions. The sanctions boiled down to a 9-month suspension of our securities licensure after we had already surrendered our license, and a $10,000 penalty or fine if we chose to re-enter the securities industry.
So
that's it.
so our bad thing that we did was try to help clients who were delayed in their rehab of their property. And so I have to tell you, that's very heartbreaking for us, being in the financial industry for over a quarter of a century and having a sterling record, and even year after year of many, many years, multiple decades of having audits and coming out really spectacular on our audits, and then having this one incident with this one client on this property that triggered this whole thing. So
yeah,
it
by the way,
that's what happened.
further into the document, they actually identify 5 transactions that were inadequately disclosed. One of those transactions was with a principal of our own firm. So I'm like, okay. That said, I think the lesson that I would like for people to take from this is, when you are an entrepreneur and you have any level of success, you get a target painted on your back. Because once you're under pressure, once you have an issue arise, you've got to be resilient, and you have to figure out how to pivot. And that's kind of where the tax thing came from.
Okay. So the one thing that I want to contribute really quickly here is, I love what you said there, Jim, about, success breeds success. It also breeds jealousy. It also breeds many other things that are not as awesome as we would like. And we've had people on my show several times talking about protecting yourself, creating entities and doing all of those things, because these things happen. I like to, my outlook on life is bliss. I like to believe that everybody's got the best intention in mind. Some people, for whatever reason, either they're desperate or something happens, they express their anger in this way. And I know a lot of people that have done, they have really, really good business practices, and this happens too. And that's why we recommend, ladies, that you protect yourself, right? So, but this happened to you guys, and thank you so much for being so transparent about exactly what happened.
Well, it is what it is. And people who do business with us should know, we don't handle people's money. We don't touch people's money.
Right.
We never have, never will. That's not us. Oh, just a fun little factoid. If anybody really wants to know, one of the people who used to sit on the board of directors for FINRA was a guy by the name of, what was his name? Madoff? Do you remember him? Just saying.
Dear.
Okay. These guys are not perfect by any stretch of the imagination.
Yeah. And the other thing is that in the financial industry, regulated by FINRA, they are not under the Constitution of the United States. Yeah. So the Constitution says you are innocent until you are proven guilty. In this format, you are guilty until you are proven innocent.
Yep.
Yeah. So it's a different world. And so
it is so different. Please understand that if somebody is securities licensed, every email they send is read by Big Brother. They have to get permission to do things like that. So when Lorraine and I were confronted with this whole issue back 2015 and 16, we really sat down and took a look at it and said, you know what, this is a set of headaches we don't need and don't want. And it has been an absolute shift. We now have constitutional rights. What an amazing experience that is.
Well, you guys know that I released all of my licenses. I had a life insurance license. I had a real estate license. So I was regulated by everybody too. And I just let them go because it turned out to just be too many more disclosures, too much more, especially in California. Like I was having to sign over my left arm just to talk to anybody about a property, right? So,
right.
So I get it. I really do get it. And I've let go of all of mine too. And it's released so much pressure from my life too. Not because I want to be dishonest. None of us want to be dishonest, but it's like, really, I do want to have some rights. I do want to be treated with respect, you know?
And you know what's interesting? I want to say, and I want to share with whoever's watching this, is that Jim and I have been very, very blessed, and we have been asked to be on several stages and to continue to be faculty and to continue to speak in many different places. And of course, with these joint venture relationships, we have disclosed what we have done here today, disclosed. And the response is, I know you guys, or the person who referred you to me, I've known them forever, or I am so grateful that you were honest in sharing with me the disclosure that in itself is all I need. And so we just keep having doors and doors and doors open to us, and we're just grateful for that.
Yeah. Yeah, I am too, because otherwise I wouldn't have met you.
Yeah, that's true. That's true.
Yeah.
And so one of the things,
why don't you talk about what happened that allowed us to pivot to
yeah,
now?
so Jim and I, because we're real estate investors, we're business owners, we have employees ever since the mid-90s, and we are taxpayers as well. And over the years, we well, first of all, when we were independent, we worked like this. Oh, there you are.
Hey.
I like seeing your beautiful face.
Thank you.
So when we first went independent in the 90s, we worked like this with the CPA for 10 years, and our eyes were like, oh my gosh, there's so much money in the tax return. And then in our own situation, we were learning, oh, okay, if you have your entity structuring and you do this and you do that, and there's all these opportunities. And then we got certified in charitable planning back in 2001.
It just goes to show that you were right. I'm certifiable.
It's one of your better qualities.
and so we started back in 2001, really focusing on the tax strategy. And then in 2016, we purchased a tax firm. And coincidentally, before this whole thing happened, right? So it was actually the end of 2015 when we were in negotiations. We closed escrow in 2016, first quarter, and then second quarter, this FINRA thing happened. So what was interesting is that whenever people have challenges, really, you have a lot of real estate investors and you have entrepreneurs. And when you have challenges, it really tests you. You really find out a lot about yourself. And so, our income was at that time 7 figures, and it just got cut off in one day.
Yep.
In one day, the broker dealer said, no, we because you're suspended, our income got cut off.
Mm-hmm.
So when you have that kind of income and you have a whole staff of over a dozen people working for you, and there's zero income coming in, you learn so much. And at that time, we had just bought a tax firm, and it was a small little one. And we're just like, you know what? Our clients were so faithful to us. They said, are you okay?
Yeah, that was very touching, the way the clients reacted to us. The vast majority of our clients were more concerned about our welfare than their own business, because they knew their business was in good shape.
And so then we started rebuilding, and we focused on truly, we have always helped people, but it was more targeted in tax strategy, because that's where we had a lot of pain personally. And a lot of our clients had a lot of pain because they were way overpaying taxes. And nothing bad about accountants, CPAs, enrolled agents. They're taught, let's prepare taxes, and they get very busy with, give me the documents in February, March, and then let me prepare the return, and here's what you owe. And for us, we have a team of tax preparers, And it's a great marriage between the tax preparer and us who focus on the tax strategy. And then in addition to that, the implementation, which is actually that's the heavy piece for us, is focusing on the implementation. So you see those dollars, and it's exciting for us to see people save. Gosh, Jim was just working with somebody, the actual savings, $148,000.
Wow.
$148,000. And guess what he's doing with the money?
Investing.
Buying real estate.
Yeah.
Buying real estate.
Now, here's the fun part. Not only is he buying real estate, but he's getting additional tax deductions for the real estate he's buying from with the tax savings he's got. So he's getting additional tax savings.
It compounds, right? We talk about
does.
compounding and making interest. We also talk about compounding this way, right? One of our favorite words.
Compounding.
Compounding.
Oh, yeah. Yeah, absolutely. So
Yeah,
you were gonna say
yes, one of the analogies I like to give people, because I don't want people to think that their tax guy is doing a bad job just because they don't have a strategy. We have to understand that most tax people are defense players. Think soccer analogy. Your tax preparer is the goalie. Think about their language. I need to be able to defend this. Can we justify that tax deduction? That they think very defensively. Our job is to come up with those strategies to score goals on the other end of the field, and working together, as Lorraine suggested, that's where the magic happens.
Right. Right. And none of these strategies are illegal. It's all written in the IRS code, right? So I think people get scared too. They're like, but why doesn't my CPA know about this? Well, because they're not spending their time studying all those different, the IRS code is huge.
Yeah.
And it's enough to just keep up with what's changed each year, much less all of the details of every little, there's trust law or trust code. There's corporate code. There's all sorts of different real estate code, right? There's so much code. So most of them will specialize, which is why usually I'll recommend go to somebody that understands real estate. But a strategist can be a little broader and look at all of those things because they're not actually preparing the taxes, right?
Correct.
Yeah.
Now, the one thing that you should know is that back in the day, we used to do things longhand.
Mm-hmm.
Now we actually have software systems, because one of the things that you said is absolutely brilliant. Everything we do is ultimately put into a written document. In that written document, we have the description of what the tax deduction is. We have what the rules are, or what you have to do to justify it. And then we have the code sections, so that they get the people who do business with us get a very robust document showing them exactly how it all works.
Yeah, mine was 97 pages long.
Sorry about that.
No. But it's true. It's so deep, which is why you got buy-in from my husband, because he wants to know all of it, right?
Yeah. And it does give people peace of mind, that included in the strategy is the IRS code. Now, all of that is wonderful and it all looks great on paper, but it is actually the implementation, so like one strategy may be putting your kids on payroll, and if you have a business or you have a real estate business, but you have to know, what is the job description? How much are they getting paid? How many hours? What's realistic? And having all of those details is so important, right? And so those are the things that we work with people on, updating their minutes, making sure the resolution is completed in their corporate documents, those type of things.
Wow, that's pretty comprehensive, right? Like, who else does that? That's amazing.
And one of the things that's really exciting for us is being able to say the phrase tax-free.
Yeah.
It truly is. One of the things that we've learned is there are several different techniques for people to get profits tax-free. And we mean without tax.
Yes, absolutely. Without tax.
So is this the piece that you were talking about, Jim, that was like getting tax-free money in your business?
Oh yeah, you get
So,
tax. Yeah.
so thank you for the tease. We're going to talk about that in extra.
Okay, that's good. That's good. That's good.
We'll
I
do
just
a
thought it
deeper
was a
dive
nice
on that.
segue that were part of the conversation for sure.
Yeah.
And the thing that's really amazing to me, and one of my deep motivations in life, is the enlightenment that people have once they understand what can be done. It's like being set free. It truly is. It's like, I can earn the money and keep it legally. Yes, absolutely. You don't have to feel like you're paying for that next Navy destroyer all by yourself. Okay. It's true.
Is that your
By the way,
outside voice?
A lot of taxpayers feel like it's like, if I could just tell the government what to do with the money, I'd be happy to send it to them. But you can't do that.
That's right. That's right. And that's one of the things that it's been kind of a theme of conversation that I've been having on this show recently is this idea. We just had Chris Larson. I just did a webinar with him.
Yes. I saw it.
Yes, it was so nice to have you there, Lorraine. Thank you. But what he does, this whole concept of make, keep, grow. And a lot of people focus on the make and the grow, right? But the thing that they don't really get their heads around or understand the importance of is that keep piece allows the grow piece to happen so much faster. And there's a few reasons for that. First of all, compounding, like the more that you keep earlier in life, the faster it'll compound and become more later in life, right? Or in a couple of years, right? But then there's also the compounding factor of what Jim was talking about, or Lorraine, forgive me, one of you guys was talking about, where you got $128,000 savings in your taxes, and instead of spending that on a boat or a car or fun or vacation, they bought another piece of investment property, right? That compounds it. So that keeping piece, which is what we're talking about here, is critical to fast growth. You're going to grow if you're doing the right things, but fast growth happens when you focus on that middle piece. And we all love, it's sexy to talk about making, and sexier to talk about growing, right? Like we love money, but that keeping piece is not as sexy, but it's, I would say, even more vital than the growth piece, right?
Yes.
It's like, matter of fact, part of the report that we produce, we do the projection of what the tax savings is worth. Now we use a really low number. We only use a 6% compounding. But the gentleman that she was referring to had a goal of being independent in 10 years.
Mm-hmm. One of the things that I noticed from his chart, which I thought was great, is, he showed the sale after 6 years of the syndication on the properties, putting 100,000. Chris Larson, right?
Yes.
Yeah.
In my webinar, that's right. Yeah.
Yeah, in your webinar. And what happened is that doing the investing and then having the growth being reinvested and having the net positive cash flow being reinvested.
Yes.
And one of the components that was missing on that spreadsheet was the tax savings.
Mm-hmm. Yes.
But I understand that's not his line of work. And
well, I also think that he doesn't want to keep it so complicated that people's eyes glaze over. There was already some concepts in there that people were like, huh? So there's definitely a learning curve on some of this stuff, but you're right. And I know that Chris knows about it. He talks about tax savings all the time, right?
He mentioned it.
Yes.
Absolutely. And he mentioned it. Yeah. I mean, it can get too complicated. I agree. I mean, in those spreadsheets, if you're not used to looking at spreadsheets like that, it's overwhelming. And so I get it.
Did you hear what he said though? He said, make $500,000 a year and you pay $100,000 in tax. How many people that make $500,000 a year only pay 20% tax?
Well, most entrepreneurs should. Our rule of thumb is 15% state and federal tax.
Right?
Combined if they're self-employed.
That's right. And so that is the huge tax benefit of working with a strategist. because most people who make $500,000 a year, especially in W-2, which is what he was talking about, right? But he does recommend starting a business, a real estate investing business or something, so that we can take more benefits, right? But I mean, you make $500,000 a year, you're probably paying in California. I don't know the rest of the country. We're paying close to 50%.
Yeah.
Right.
13% highest, 13% income tax rate in the state of California. We are now number one highest income tax state in the union.
Yay. Congratulations, us, right?
Right.
So, and Dave and I aren't there, but we never want to get there. I'm just saying. But it was so interesting as Chris was talking, I was like, what? $100,000 in taxes. I mean, I know what you mean, but like, I don't know that people catch this, that he's talking about a 20% rate. You're talking about a 15% rate, state and federal, right? Oh my God, what a savings that is, right? But people don't know how to get there and they don't think it's legal, right? So, so
here's what they say. They say, well, wait a minute. Isn't that a red flag or an audit? So if you've got the documentation, if you've done your homework and everything's ready to go, and the IRS comes knocking, you show them here, you show it to them. That's like next.
Like something, like you have a lot of real estate investors. I don't care if they're W-2 or if they're not. Real estate is such a beautiful investment because the income off of real estate isn't subject to FUTA and FICA. So you don't no self-employment tax. So it's just it's federal and state. And then there's this beautiful thing called depreciation on investment real estate. So if your cash flow is $50,000 a year and your depreciation is $30,000 a year, then you're only paying tax on $20,000. 30 of it is tax free. So you have the opportunity of having tax-free income on real estate, regardless of your status.
Yeah.
Right. And so that's a really good thing. And that's just the IRS. They came up with the rules.
Right.
So there's a couple of different types of tax that people should be aware of. There's income tax, like W-2 type income tax. There's investment income tax, and there's capital gains tax. There's also estate tax. Our practice is primarily on income tax related, so your tax return stuff. And that comes into those three categories. And knowing how to move the investments around so that taxable income falls into the various categories is very important. And that's part of the skill set. So in other words, it's not just some tax thing, investment, it's how you report your income. It's how you play the game can really have a huge impact.
You were going to say something, Monica?
I was going to say that I was actually going to give you guys a recommendation, but I don't want to cut off this conversation. I will do it at the end.
Okay.
Very good.
Is there anything else you wanted to share? People are thinking about their 2022 taxes. It's tax season. Is there anything you want to share about sort of what's coming up for us? And
I tell you what, here's what I would tell people to do. Sit down with a pad of paper. If you spent money and you can remember it now, it was a significant enough amount of money that you should be able to write it out. And when you go to do your taxes, you should be asking not, is it tax deductible, but how can I make it tax deductible? It's a different mindset. So if your mindset is to spend money tax deductibly before you do your tax calculations, that in and of itself could be a huge boon.
I love that mindset piece, Jim. I have to tell you a funny joke. Actually, my organizer was sitting and doing my filing, and she's looking at all my real estate stuff, and she says, I'm learning so much just from doing your paperwork. I was like, and actually my organizer in San Jose did the same thing. She started investing in real estate because she was doing my filing. It was interesting. I love that. Right. So anyway, she's like, I'm learning so much. And she says, I heard this joke and I didn't know anything about what it meant until I met you. She said, there was a teacher and she's doing tutoring and she bought sticky pads and she used the sticky pad. She only used 50% of the sticky pad for her students. And she's like, can I write this off? Like, I used 50% for personal. I don't know. Should I write this off? Is that legal? And then there's a really, really rich billionaire who's got his yacht and he tells his tax consultant right off the ocean, it's part of my business. Such a different okay, so I don't think the billionaire should be writing off the ocean, just for clarity, but it's such a different mindset. Like, how can I write this off? How can I make it write offable, as opposed to, should I do that? Right?
Yeah, exactly.
I do have something to share with you. This is a fun conversation I get to have. Now, please understand, I have had 100% agreement on this factoid. And I've talked with absolute liberals, I've talked with conservatives, I've talked with Greenpeacers, you name the political spectrum. I talked to them about our favorite ex-president with the comb over. Donald Trump reportedly spends $60,000 a year for that hairstyle.
60,000?
60,000.
And it doesn't even look good. Sorry. Opinions.
Okay, so he spent $60,000 for that hairstyle. Let me ask you a question. Do you think there's any way in God's creation he's not taking tax deductions for that $60,000?
He is.
To a person, everybody absolutely trusts Donald Trump to know the tax code and know how to get that tax deductibly. So if he can take a tax deduction for a bad hairstyle, what can you take a tax deduction for? Just saying.
That's really something to think about, right? I'm thinking, well, I'm on TV. Should I write off my hairstylist? I don't know. I won't do it. But anyways, whatever. But there's a lot of these things that kind of come up, right? That we don't know we can take. Unless you're one of those privileged people that lives and goes, socializes in a community where these things are talked about, sort of like it doesn't matter, like it's regular conversation, like the rest of us might talk about the weather, right?
Yeah.
And there are people that live with that kind of privilege. Donald Trump is one of them, right? But but the rest of us not so much, right? We've got to be in on these kinds of conversations and really seek them out, right?
Yes. So one of the things I wanted to just let everybody know is that we do have a process where we can help people and do an assessment. And so what we do is we get a secure Dropbox. We send people a secure Dropbox, a simple questionnaire, and we take that tax return, the last year tax return, put it into our software, and then we look and analyze on what are the things that they're doing and what are they missing. And then we create that report. We did that for you, Monica.
Yes.
And then we create that report. There's not a charge to go through that process, and we create the report, and then we look at, here is some opportunities that you may be missing. And here's an estimate of what tax could be saved. And then at that point, if people want to move forward, then we'll discuss how we can implement and help them. And if not, that's okay. At least they got an idea of where they are.
Perfect. So Lorraine and Jim actually did that whole breakdown for me too. And I sent my stuff in, and it was really, really informative, and saved us quite a lot of money on our own tax returns. We still have lots of questions, but they're always so patient with us on that stuff. So thank you guys for that. And I want my ladies to be able to take advantage of this too. So ladies, all you need to do is go to blissfulinvestor.com/tax strategy. So it's tax strategy after blissfulinvestor.com. And there you'll get to sign up for this strategy session. Jim and Lorraine normally charge $497 for this because it takes their time and all of that stuff. But because you ladies are all blissful investors, you can get it for $297. So just go to that link to get the discount. Okay. blissfulinvestor.com/tax strategy. Does that make sense?
Yeah. I love it.
Good.
Yes.
Yay. So we are going to be talking about how to get free money on your taxes or free income from your business. That's going to be an extra. Yay. I'm super excited about that. Did you guys want to say anything else before we close?
We are so much looking forward to dealing with some of your lucky ladies and getting them to their lowest possible tax. I love the financial freedom that paying the right amount of tax provides for people.
And I just want to say thank you, Monica,
Like she
for having us on your show and taking the time and having us explain what's on the internet, and because our heart is really in helping people. This is our ministry, what we're doing. We follow what we preach. When I heard your last speaker speak, Chris, he made a comment about asking, are the people that you work with, what is their net worth? Are they 7-figure? Are they 8-figure? Are they successful? Where are they? And I thought, thank goodness he asked that. I was so happy he did, because that's an important question. And that's where Jim and I are. We do practice what we preach. And this is our ministry. We're financially independent, and we choose to do our calling to help and educate people.
Yeah. I know that about you guys. And I'm so glad. The other thing is, so I've had other people that have had stuff that they find, my people will find on the internet, and they don't want to talk about it. They're skittish about it. They're embarrassed about it. So I just love that you guys are so willing to share, the truth, the real story.
Absolutely.
And to me, part of integrity is being transparent. So I really appreciate that about you guys. Before we sign off, I want to just say one of the big reasons why I first got connected with these amazing people years ago was I was at a seminar, and someone said that she retired. She had some assets, didn't know what she was going to do. And she retired in 5 years, put together a plan with her strategist and retired in 5 years. And I was like, who was your strategist? Because she did not have the equity that I did. She hadn't been spending that much time. Yeah. And she's like, oh, you've got to meet Lorraine and Jim. And I was like, okay, I'm with them. And I know I've heard over and over and over again. And part of what I love about you guys is you look at the strategy, but you're not like most financial planners or financial strategists that only look at stocks, bonds, whatever else it is, right? Life insurance, whatever it is that people are talking about, you actually include in the strategy real estate and tax. And to me, I was like, I actually said this to Lorraine, where have you been all of my life? I needed you. And that's why I've just been referring. And I hope that people feel much more comfortable now with that referral. And we'll start moving towards working with you guys, because I know you guys have done magic for so many people. And so I'm so very grateful that you're out there doing this, even though you don't have to,
Yeah. Well, thank you. And thank you for educating all of your people and all the work that you do. It really is such a great community and education. And you do it from your heart. I can see that you do that from your heart.
Thanks, guys. Ladies, stay tuned. This has been amazing, hasn't it? And you got more. We're going to be talking about getting free money from your business. Like, who wants that, right? So we're going to be talking about that in Extra. So if you're subscribed to Extra, please stay tuned. There's more. If you're not, but would like to be, go to realestateinvestingforwomenextra.com and you can sign up there. For those of you that are leaving Jim, Lorraine, and I now, thank you so much for joining us for this portion of the show. We appreciate you, and I can't wait to see you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you soon. Bye.
I hope you enjoyed today's show. If you'd like to find out more about how to become a blissful millionaire, go to blissfulinvestor.com. See you next time.